Welcome to the exciting world of real estate investing. Whether you're a seasoned entrepreneur looking for new opportunities or a beginner eager to dip your toes into the market, this video is here to guide you towards success. Real estate investment can be an incredibly lucrative venture, but it's important to have a solid understanding of the different strategies and options available. In this video, we'll explore the various types of real estate investments, weigh their pros and cons, and provide valuable tips on how to get started. So grab a cup of coffee and let's dive into the realm of real estate investment strategies for beginners. The different types of real estate investments. When it comes to real estate investments, there are several options available for beginners to consider. The first and most common type is residential properties. This includes single-family homes, townhouses, and condominiums that can be rented out or sold for a profit. Residential properties are often favored by new investors due to their lower price points and relatively stable demand. Commercial real estate is another avenue worth exploring. This category encompasses office buildings, retail spaces, warehouses, and more. Investing in commercial properties can yield higher returns but also carries greater risks. It requires careful consideration of location, market trends, and potential tenants or buyers. For those seeking a hands-off approach, investing in real estate investment trusts, REITs, might be the way to go. REITs allow individuals to invest in portfolios of income-generating properties without the hassle of direct property management. They operate like mutual funds for real estate and provide diversification benefits. Vacation rentals have gained popularity in recent years thanks to platforms like Airbnb and VRBO. Investors purchase properties in desirable vacation destinations and rent them out on a short-term basis. While this strategy can generate substantial rental income during peak seasons, it may also face challenges during off-peak periods. There's the option of investing in raw land or undeveloped lots with future development potential. This strategy involves purchasing land with hopes of its value appreciating over time as surrounding areas undergo growth or infrastructure improvements. Each type of real estate investment has its own set of advantages and disadvantages that must be carefully considered before diving in headfirst. The pros and cons of each type of investment. When it comes to real estate investment, there are several types of investments that beginners can consider. Each type of investment has its own pros and cons, which should be carefully evaluated before making a decision. One common type of real estate investment is rental properties. This involves purchasing a property and renting it out to tenants. The main advantage of this strategy is the ability to generate regular cash flow through rental income. Additionally, rental properties have the potential for long-term appreciation in value. However, being a landlord also comes with responsibilities such as maintaining the property, dealing with tenant issues, and managing vacancies. Another option is investing in fix and flip properties. This involves buying distressed properties at a low price, renovating them, and selling them for a profit. The advantage of this strategy is the potential for high returns in a short period of time. However, flipping properties requires significant upfront capital and carries the risk of market fluctuations affecting sale prices. Real estate investment trusts, REITs, provide an alternative way to invest in real estate without directly owning properties. REITs are companies that own or finance income-generating real estate such as shopping malls or apartment buildings. Investing in REITs offers diversification and liquidity since they can be bought and sold on stock exchanges like any other publicly traded company's shares. There's the option of investing in real estate crowdfunding platforms where multiple investors pool their money together to fund projects such as commercial developments or residential complexes. Each type of investment has its pros and cons depending on factors like risk tolerance level or desired level of involvement. How to get started in real estate investing. Getting started in real estate investing can seem like a daunting task, especially for beginners. However, with the right knowledge and strategies, anyone can enter this potentially lucrative field. The first step in getting started is to educate yourself on the basics of real estate investing. Research different types of investment properties and familiarize yourself with key terms such as cash flow, ROI, return on investment, and cap rate. This will help you understand the potential risks and rewards associated with each type of investment. Next, it's important to set clear goals for your real estate investments. Determine whether you want to focus on long-term rental properties or short-term flips. Consider factors such as location, market trends, and your own personal preferences. Once you have a solid understanding of the market and your goals, start building your network. Connect with real estate agents who specialize in investment properties, join local investor groups or attend networking events. Building relationships with professionals in the industry will provide valuable insights and opportunities. When it comes time to make your first purchase, be sure to conduct thorough due diligence on any property you are considering. This includes evaluating its potential value appreciation, conducting inspections for any structural issues or necessary repairs, and researching comparable sales in the area. Remember that real estate investing is a long-term game. It's important to be patient and not rush into deals that may not align with your goals or financial capabilities. By following these steps and staying informed about current trends in the market, you'll be well equipped to get started in real estate investing as a beginner. The different strategies for real estate investing. When it comes to real estate investing, there are several strategies that beginners can consider. Each strategy has its own unique advantages and risks, so it's important to choose one that aligns with your goals and risk tolerance. One popular strategy is the buy and hold approach. This involves purchasing a property with the intention of holding onto it for an extended period of time, typically in order to generate rental income. This strategy can be lucrative as rental properties can provide a steady stream of cash flow, but it requires careful research and management to ensure the property remains profitable. Another strategy is fix and flip. This involves buying a distressed property, renovating or improving it, and then selling it quickly for a profit. Fix and flip can be more risky than buy and hold as it requires market analysis, renovation expertise, and accurate estimation of costs and potential profits. For those looking for a more passive investment option, real estate investment trusts, REITs, may be worth considering. REITs allow individuals to invest in portfolios of income-generating properties without having to directly manage them. However, returns may vary based on market conditions and management performance. Crowdfunding platforms have emerged as an accessible way for beginners to invest in real estate projects alongside other investors. These platforms pool funds from multiple investors to finance various types of real estate ventures such as residential or commercial properties or development projects. These are just some strategies that beginners can explore when getting started in real estate investing. It's crucially important though not only understand each strategy thoroughly but also assess your personal financial situation before venturing into any investment path within this sector. The benefits and risks of each strategy. When it comes to real estate investing, there are several strategies that beginners can consider. Each strategy has its own set of benefits and risks, which is important to understand before diving in. One popular strategy is rental properties. Investing in rental properties allows you to generate passive income on a monthly basis. The benefit of this strategy is the potential for long-term cash flow and appreciation of the property's value over time. However, being a landlord also comes with its fair share of risks, such as dealing with tenants, maintenance costs, and potential vacancies. Another strategy is fix and flip properties. This involves purchasing distressed properties at a discounted price, renovating them, and then selling them for a profit. The benefit of this strategy is the potential for high returns in a relatively short period of time. However, it also carries the risk of unexpected renovation costs and market fluctuations that could affect your ability to sell the property quickly. Wholesaling is another option for beginners. With wholesaling, you act as an intermediary between sellers and buyers without actually owning the property yourself. The benefit here is that you can earn quick profits without having to invest large amounts of capital or deal with renovations or tenants. However, finding motivated sellers and reliable buyers can be challenging. Real estate investment trusts, REITs, are yet another strategy worth considering. REITs allow investors to pool their money together to invest in income-generating real estate assets such as commercial buildings or residential complexes. The main benefit here is diversification. You're not reliant on just one property's performance, but keep in mind that your returns may be lower compared to direct ownership. Crowdfunding platforms have made real estate investing more accessible than ever before by allowing individuals to invest smaller amounts into larger projects alongside other investors online. This provides an opportunity for diversification while minimizing some risks associated with direct ownership, but always research carefully before investing through these platforms. Real estate investment can be an excellent way for beginners to start building wealth and securing their financial future. By understanding the different types of real estate investments and the strategies involved, you can make informed decisions that align with your goals and risk tolerance. Whether you choose to invest in residential properties, commercial real estate, or real estate investment trusts, REITs, each option has its own advantages and disadvantages. Residential properties offer the potential for rental income and long-term appreciation but require active management. Commercial real estate can provide higher returns but often requires larger upfront capital. REITs offer diversification but are subject to market volatility. To get started in real estate investing, it's essential to educate yourself about the local market, financing options, and legal considerations. Building a solid network of professionals like realtors, lenders, and attorneys who specialize in real estate is also crucial. When it comes to strategies for real estate investing, there are various approaches you can take based on your objectives. Fix and flip involves purchasing distressed properties at a low price, renovating them quickly, then selling them at a profit. Buy and hold focuses on acquiring rental properties for passive income generation over time. Other strategies include wholesaling, finding discounted properties and assigning them to other investors at a fee without actually buying them, as well as crowdfunding platforms that enable multiple investors to pool their resources into larger-scale projects. Each strategy offers its own set of benefits and risks. It's important to carefully evaluate these before diving in headfirst. Consider factors such as your available capital, risk tolerance level, and desired level of involvement in managing the investments. Real estate investment provides opportunities for beginners looking to grow their wealth through property ownership. Understanding the different types of investments available along with their pros and cons is key when starting out. By applying appropriate strategies tailored towards individual goals, investors have better chances of success while mitigating potential risks. Remember to do thorough research. Surround yourself with a knowledgeable team